NextGen Economy gives a lot of new opportunities for the insurance as an industry. From a life insurance perspective, digital gives us a reach in locations where we don't intend to open an office, or it is very expensive to open an office. So digital helps us to get through tier 3, tier 4 cities. And also, there are two things which we require. One is reach, and second is data about the customer. And NextGen Economy offers both. So I think there is a tremendous it gives a tremendous opportunity for us to grow. One is that access to capital, of course, and it's not that Indian insurance industry does not have access to capital. You have seen successful IPO of many insurance companies. So one is that it will be easily access to capital. Then I think that insurance industry in India has quite evolved in terms of adapting technology, data analytics based pricing, AI, Gen AI. So from technology perspective, I think that it is a good opportunity for mutual learnings in terms of what has been the learnings of the foreign partner, what has been the learning, the Indian learning. So I think it's a very interesting time ahead. So in 2025, there are a couple of things I think are big risks. One is that, data security. So we have seen some data breaches which has happened to insurance companies. So data security is one of the important risks which we run. Second is we are collecting a lot of data, and how do we store this data? Where are we using this data? And are we compliant from a regulatory point of view is the second risk I see. Thirdly, as I mentioned earlier, the bank assurance, the current bank assurance model is, very, very, we are leveraging this loan book of the bank, and the regulator is in a mood to stop that. So when we stop loan attachment business, there are two things which is going to happen. One is that the challenge of how do you address the short-term revenue loss for both for the bank and the insurance company. While I feel this is a very short-term risk, from a long-term perspective, we need to start building products which are easy to understand, affordable, can be distributed digitally, so that we increase the user base. And we also talk to customers of the bank who are non-loan customers, like your salary accounts, your credit card business, your merchant acquisition business, your Forex business. So I think it's a very, I think we are at the tipping point. From here, if we have to increase our penetration and footprint, we really need to think out of the box, think of newer products, newer distribution channels. So I think we are blessed to have a very proactive regulator, and regulator is always keeping us on our toes, and multiple changes do happen. Introduction of KYC was one thing which, really, especially for the general insurance industry, because it was already implemented in the life insurance sector. For general insurance industry, we really had to rework on our customer journeys. And especially small ticket size products got affected because customer had to do a couple of more steps to buy those products. So I think there we had a challenge, but I think with more and more customers having eKYC numbers available, we are seeing an improvement in the customer journeys and overall customer experience. The second biggest thing is 1/N. So whenever insurance company sells a long-term insurance policy, I'm talking about general insurance in particular, when we sell a long-term policy, which is more than 12 months, we were recognizing all the income or the GWP in the year one, and we were paying commissions in the year one. But now, as per the latest regulation, if I'm selling a 5-year policy, I have to, if I'm collecting 500 rupees for it, every year I will be recognizing 100 rupees and paying commission to that effect. So this, I think, is going to have a major impact, especially on the institutional and loan attachment business.